Hi, this is May 26th and it is 8:30 UK. Market makers are back at their desk, so even if pricing is not very accurate before market opens, it gives us a good indication. Now let's look at the VIX futures. The term structure is fairly flat from 28.90 to 31.40, so pretty flat over the next 6 to 8 months. It is to be considered as in contango, but it can change very rapidly. Let's not take for granted that it's going to go up from here. Market is still very hesitant, even though, as you could have seen in the previous video, it looks like the breakout will bring in a change of tone, with the market now hovering above the former resistance between 970 to 980. Okay, so let's go to option net explorer. And this is the adjustment I've been looking at for the pain in the backside trade, the roll to June. At this point, with theta picking up in the last few weeks of the cycle, I'm inclined to just shift the tent upward. And as you can see from a 50 point, I'm moving up 50 points on the put side and 25 points. So I'm narrowing down just a tad the size of the tent. The delta, now that in pre-market we are about 3000, 3010, is going to be still reasonable at -10, and I'd rather keep it that way, capture some more theta. To be honest, I was hoping, if the market was not moving so rapidly, I was hoping to be able to roll in the -3K area. So we're still way below target. So I'd rather just shift the tent upward instead of rolling to June 30th or July. It's going to take a while to recover this trade, and I may not even be able to recover it completely, considering that capital will be needed in the next cycles. The August cycle will be started soon. Thankfully, because of this new regime, higher volatility, I would rather go for smaller positions. For this cycle, let's just look at this recommendation to shift with a short condor here and a butterfly up there. The overall loss would be still reasonable, although I've got no real hope of getting anywhere close to that. Again, if I could, in market just would hover directionless in this area, I would probably go for -2 if I could, before rolling to June 30th or July. Okay, so let's cancel this for now. I will confirm it later. Now look at the July trade. July trade is really easygoing. We're making a bit of money. Delta is flattish to slightly positive. So what could we do? Either nothing, because we are in a good position technically, with delta keeping moderately positive up to 2750. So this trade would probably not require any adjustment or even tuning. Now, what could we do? Technically, we would look at the lowest short to start rolling back or adding some broken butterfly on the downside. Realistically, with now 2810 being a strong support, there will probably be no need to do anything. Let's not forget that we have no upside risk, so we could be tempted to leave this trade unchanged. It's using very little capital, and it can bring probably $800 to $1,000. So now, for those who would like to add another layer, in pre-market we are around 310, so let's see what a small broken butterfly around 325, about here. It would definitely bring more theta here. Delta would be positive, to maybe a little bit too positive for this type of trade, but do we want to forfeit the fact that this trade has got no upside risk? I don't think there's any reason to go for this, except for a little bit negative delta, a little bit more theta here, and a maximum loss of $300. So the cost of this, probably $3 or so, 320, will be the price to pay to have a flattening of the delta and a bit more theta in this area. That said, we could pay less, because now this is more appropriate for a Brocken butterfly to place with upper longs just above the market. Now, if we were to add some theta, but maybe in this area, I would apply this type of situation here. This would also increase theta just a little. Not, I mean, no real change to the overall structure, by the way. And this would probably cost to about $200. Or the other possibility, as a matter of fact, would be to also simplify the trade by removing strikes here and going for just a plain condor. That would cost probably also about $2 to $3. $3. Same, no change in capital usage, so it's pretty simple. So this is kind of tuning that could be done. As a matter of fact, it's mostly simplifying and keeping the upside risk quite minimal. So this trade would be doing quite well up to probably 30, almost 3100. This minor upside risk is virtually irrelevant. So this is a thing we could look at, but really it's only for those keen to do some minor tuning and simplification of the trade. Okay, that's it for now. Too early to look at August. The good thing is that we could start August with the residual roll of a trade, because this one's all using less than 10. If we were to enter August soon, it would be probably another 10, so we would be about 20. So we would have up to 15 to 20 for the rollover. Of course, that's excess capital that is used for recovery, but that is to say that it is not a train smash. We are still in a good position to work on trade recovery, something that we couldn't do in low IV because the follow-up cycles would cost far too much. Okay, thank you for watching, and I will be there on Slack later on. Bye for now.